Good evening, May 9th, 2023. Let's get into a quick recap of today's activity, go over what occurred, what opportunities were available for us today. So every day we look to have some type of summary of activity and to put the activity in a type of nutshell. Today's nutshell is very evident. But it's also the good thing about the market in that every day it tells us a story. It's like a play that unfolds. We can see the participants and we can see the results. So the good thing about that as day traders, as compared to swing traders, is that we are in favor of any type of story, as long as it's a consistent story and as long as it's obvious. We're able to adjust our trading style and take advantage. So today's activity showed choppy activity. So let's look at the 1 minute and we can see from the market open at 8:30 all the way up to 2 o'clock, and going forward we stayed basically in the same channel. A good thing to note, I have this on the chart automatically. This is an algorithm that lets me know the first hour of trading activity. And it's good to look at because you can see when a market is breaking out of the first hour's range and when it's staying within the range. And what we can see today is that the trading activity basically stayed in the same range that it started in all morning and all afternoon. So going to the daily, as we usually do, we can see today's activity was similar to yesterday's activity. Let's blow this up and look at yesterday's activity. Yesterday's activity was very interesting because we had what's called a hammer yesterday. This is May 8th yesterday. This is today, May 9th. And this is setting us into the overnight trading going into tomorrow. So yesterday we had this hammer right here. And basically what this hammer is that the wick on the right side is equal to the wick on the left side. The opening price and the closing price are very similar. That occurs when there's a lot of trading activity during the day, but there's no movement. It basically goes up, down, up, down, up, down. So that was the day yesterday. So when we take that into consideration, we are going into today with the mentality that since yesterday was pretty low profile, that today would potentially be low profile as well. And why would that be the case? It's because the day before, May 5th, going back to Friday, we see this huge bar. So this wick, the left wick opening and the right wick closing, we see that Friday broke this potentially downward trend again. We were looking at bouncing off of this zone and going downward. What that would have meant was that the bulls were taking a back seat and letting the bears have their activity and pulling the market back down. We did not see that on Friday. We saw a total reversal, and that pushed us back up against this zone here. So now, yesterday and today, puts us into what we can call congestion. So that is the story that we have going into today. Analyzing the story of the market lets us adjust our trading styles. For example, if we're in a congested market, we're not looking to have extended winners. We're looking to preserve capital, and we're also looking to increase our lot size because we know that the market is in a tight range, and in order to get a decent profit, we'll need to have a higher lot size. Contrary to a market that is moving at a very drastic rate, we would want to lower our lot size so that we can take advantage of the move without getting stopped out during the swing times. So today we were able to trade with a higher lot size. And basically the shape that it took, as we were going through this channel all morning, we had this breakout here, which happened 2 o'clock, 2:20. We had an opportunity here because the market was on low volume, so it did not look like it was going to continue this push outside of this morning range. And going short here gave us a quick quick trade, but it was very, very slow in terms of having to watch the market all morning to see that we were indeed in a congested market. So those were the results in terms of trading opportunities. A lot of individuals would look at today and would not see any trading activity because of the choppiness of the market. But however, approaching the market with the lens of the different ways that the market moves. Again, we go over this in our ebook, which is the Emini playbook. Going over the market in terms of the three main directions that the market can move in, which is up, down, sideways. We see that today we were definitely in a sideways market. And then also combining that with the 7 moods that the market can move in, which is the trend pause, the trend continuation, congestion, congestion exit, trend reversal, and trend continuation. When we combine those things, we are able to pinpoint our trading methodology for the day. And we're able to make a huge number of decisions in terms of our money management and the type of trades that we are looking for. So that's the benefit of having that lens in place before we start the day. And going into tomorrow, we can see that we are still going sideways. We are at a point of indirection and indecision. The Bears have not taken control and neither have the Bulls. So we can expect one of two things tomorrow, either a continuation of this congestion or we'll see a development of a dominant market player, which would drive the market either through this range, this zone, which we have not been able to break for 1, 2, 3, and potentially 4 times. And that would cause this trend to continue, or a reversal off of this zone, which would take us back down lower, which we also have not been able to accomplish. So we have those things in play going into tomorrow. So that was the summary of today. Again, we have a number of principles in our ebook. You can get the details below. In it, we go into more specifics about the ways that the market moves and how you can apply those daily to your trading activity. Hope everyone had a successful day, and I look forward to speaking to you tomorrow.